continuing with our revision of financial reporting. Today we are covering question number 3 from the June 2015 question paper. Let's scroll to the required. Section B, question 3. Here is our question 3. Go to the required. Required, prepare the statement of profit or loss for Clarion for the year ended 31 March 2015. B, prepare the statement of changes in equity for Clarion for the year ended 31 March 2015. C, prepare the statement of financial position for Clarion as at 31 March 2015. D, calculate the basic earnings per share for Clarion for the year ended 31 March 2015. E, prepare extracts from the statement of cash flows for Clarion for the year ended 31 March 2015 in respect of cash flows from investing, ignore investment income and financing activities. 4 marks. A total of 30 marks. So we know what we are supposed to do in terms of the requirements. So what we are going to do, we are going to slowly read the question. When we are reading, we will be making a lot of workings, taking note of what we are required in mind. So I will be explaining here and also doing workings for all the requirements. Then at the end of the day, we will now answer the question from A up to E. Now let's read the question. The following trial balance relates to Clarion as of 31 March 2015. We are given the trial balance here. I will not read. We are given the trial balance here. Then we are given the notes. When you are given the notes, that's when you will start now to do the workings, consider bearing in mind what you were required to answer. So you will be doing workings in such a way that they will be answering what was required. Now, note number 1. The equity shares and share premium balances in retired balance above include a fully subscribed 1-for-5 rights issue at $60 per share, which was made by Clarion on 1 October 2014. The market value of Clarion's shares was $2.50 on that date. The rights issue is the issue of shares below the market price but above the nominal value. So the rights issue is simply a combination of the bonus issue and the full market price issue. So in thereby we will see when we are doing the earnings per share how to uplift or add the bonus fractions to the shares that were originally there before the rights issue. Now the equity shares as per the I have gone ahead and created the template as usual. So the equity shares as per the trial balance is 30,000 in thousands. The share premium is other components of equity. Share premium as per the trial balance, it's 5,000 like that. So now we will need to know how much or the number of shares that were issued during the year, as this will assist us when calculating the earnings per share, and also this will assist us when preparing the statement of changes in equity. Now we need the number of shares. So the rights issue, they issued 1 for every 5. So if the shareholder had 5 shares, he was issued an additional 1 share. So at this present moment, it means each shareholder now has got a portfolio not of 5 shares here, but a portfolio now of 6 shares. So how many shares were issued? If now each shareholder has got a portfolio of how many? 6 shares. So what we are going to do, we are going to divide that figure that we have by 6 shares, because now after this issue, before the issue, each shareholder had got 5 shares, but after the issue, each shareholder has got 6 shares. So how many shares were issued? Only 5,000 shares were issued. So if 5,000 shares were issued, so before the issue, how many equity shares were there? We can simply say 30,000, this is nominal at dollar, less, apologies there, 30,000, which is the nominal equity, less number of shares issued at dollar, which is 25. So before the issue, the shares were 25,000. And we can prove this because we said each shareholder, when he was holding 5 shares, he was given another share. So we can simply say 25 divided by 5 multiplied by 1. Or we can simply say 25 multiplied by 1 divided by 5, because that's the ratio here. We get the number of shares that were issued as 5,000, like what we did here by dividing by 6. Now, they were issued at $60, so we can simply say equity issued be 5,000, the number of shares, multiplied by dollar, which is the nominal value. We get 5,000. We can simply say again 5,000 if we want to calculate the share premium, multiplied by the premium. The premium, the shares are issued at $60 less the nominal value of dollar, so is 3,000. At this present moment, we can sum up to get the total cash flow, because these shares were issued at $60. So the equity at dollar, the share premium at 60 cents. So the total cash flow is 6, as we will be preparing the extracts of statement of cash flows. Now, we have calculated before the issue, the equity was 25. What about the share premium? The share premium as per the trial balance is 5,000 less the share premium caused by the rights issue. So at the beginning of the year, the share premium was 2,000. We are doing this so that we'll be able to prepare the statement of changes in equity. Now, we are still on note number 1. We know that we are to calculate the earnings per share, so we want to calculate everything that will help us to calculate the earnings per share. Now, we want to calculate the theoretical ex-rice price, formerly known as TERP, theoretical ex-rice price. This theoretical ex-rice price is used for us to be able to uplift the existing shares or to add the bonus fraction on the existing shares. Now, how much was issued? 1. How much was there before? That's 5. So each shareholder had got a portfolio of, is now a portfolio of 6. Then how much was the market value of the shares? Is $2.50. How much is the rights issue? So one share was issued at $60, but the market value of the portfolio of 5 shares is $2.50. Now let's find the total, the product there. If you can sum those figures together. Now we see each shareholder has got a portfolio of 6 shares worth $14.10. So how much is each share price in that portfolio of 6? So we'll simply say 14, the total, divided by the total number of shares. So each share is now $2.35 in the shareholders' portfolio. We will use this to uplift the number of shares. Now, before the issue, how many shares were there? Before the issue, the shares were 25, like that. After the issue, how many shares were there? As per the trial balance, they were 30, like that. Then this 25, we need to multiply this before apportioning it. We need to multiply it with the bonus fraction. The bonus fraction is always calculated by the market value divided by the theoretical ex-rise price, like that. So we will uplift these shares by the bonus fraction of $0.06. So now we'll simply say how many months? That's April, May, June, July, August, September. That's 6 months. So we'll say 25 multiplied by bonus fraction multiplied by 6 divided by 12, like that. Then the 30,000, it's October, November, December, January, February, March, another 6 months. So we'll say 30,000 multiplied by 6 out of 12, like that. Then we sum up. When we sum up that, we get the weighted average number of shares. Some they like to call it WANOS, weighted average number of shares. This is the number of shares that we will divide by when we are calculating the earnings per share. We have completed our note number 1. Let's go to note number 2. I'll be moving slowly, but at the end of the day, every calculation will be there for us to be able to complete the requirements. Note number 2. On 31 March 2015, 1/4 of the 8% loan notes were redeemed at par, and 6 months outstanding loan interest was paid. The suspense account is the double entry corresponding to the cash payment for the capital redemption and the outstanding interest. Now, the suspense is 5,800. We are told that 1/4 of the loan note was redeemed. The loan note is 20,000. So 1/4 of it was redeemed. So okay, what was done? The person credited bank by 1/4, 20,000 divided by 4, like that. Then the accountant did not know where to put the debit balance, so he debited the suspense by 5,000. Again, the interest, we are told here that the outstanding interest was for 6 months. So the loan note is what? Is an 8% loan note. So if we say 8% multiplied by 20,000 multiplied by 6 divided by 12, we get 800, like that. So the accountant credited cash, which was correct, and debited in error the suspense account. So the suspense account has got how much? 5,800, as you can see here. Now, this is what was done, but to correct that, we need to reverse everything from the suspense account. So we'll reverse this debit from the suspense account. And what should we debit? We should debit the loan note. The loan note has got a credit balance. So if we debit the loan note, we are reducing the loan note from 20,000 to 15,000. Then also we need to credit the suspense account for this interest that was charged. Then we need to debit correctly the finance cost. That is the interest outstanding. Now we are finished with that note. Now let's go to note number 3. Note number 3, we've got property, plant, and equipment. Included in property, plant, and equipment, the property, plant, and equipment that we are talking about is this for 85,000. Included in property, plant, and equipment are 2 major items of plant acquired on 1 April 2014 that were acquired at the beginning of the year. It makes our lives easier as we are not going to be apportioning the depreciation. Now, item 1 had a cash cost of 14 million. We can come here and say 14 million, that is a cash cost, which is a cash flow for our extract of cash flow. The plant will cause environmental damage which will have to be rectified when it is dismantled at the end of 5 years. The present value discounted at 8% on 1 April 2014 of the rectification is 4 million, which is 4,000 in 1,000. We'll put our 4,000 like this. The environmental provision has been correctly accounted for. However, no finance cost has yet been charged on the provision. So there is no finance cost. We need to charge the finance cost here of how much? Of 8%, like that. We are not apportioning as it was beginning of the year. So the closing provision for environmental cleanup or rectification is now 4,320. Now here, our asset, the plant that was acquired, is for 18,000. Then we need to depreciate everything. We are told that depreciation is a straight line over 5 years. So we depreciate like that over 5 years that acquired plant. The carrying amount of that plant is now 14,400 at the end of the year. We are done with that note. Let's go to note item number 2, which is a leased plant. An item of plant was acquired with a fair value of 8 million under a 5-year finance lease. This required an initial deposit of 2.3 million and annual payments of 1.5 million on 31 March each year. The finance lease obligation in the trial balance above, finance lease obligation of 4.2 in trial balance above, represent the fair value of the plant less both deposit and initial payment. This is incorrect. We mustn't do that. The lease has an implicit interest rate of 10%. We'll use the 10% to find the finance cost. And the asset has been correctly capitalized in the plant equipment. Now, the fair value that was capitalized is 8 million, of which is 8,000. We divide by 5 years. Then now that carrying amount at the end of the year is 6.4. Now we need to deal with the finance lease obligation. The present value we are told is 8,000. The deposit, which is a cash flow, 2,300. This deposit was made at the beginning of the year, so the deposit reduced the capital amount, as 8,000 is the capital amount. There was no interest at this present moment, so the whole deposit reduced the capital amount to be 5,700. Then now we need to add interest of 10%. Then we need to subtract the payment that was made at the end of the year. So the payment includes the capital element and the finance cost element. So out of the interest of 1.5 million that was paid, how much is the capital amount? So we can simply say this plus the finance cost. So only the capital amount of 930 was paid. This will come handy when you are preparing the statement of the extract of cash flows, as we mustn't include the finance cost. We should only include the repayment of the capital amount. So the 930 was paid out of this 5.7, the capital amount. Then the carrying amount of the finance lease obligation or finance lease liability at the end of the year was 4,770, but we need to split this into the non-current and the current. So we'll continue. We'll add the 10% interest on this figure. We will less the interest. This is the cash flow, but for the following year. Then when we sum up, we get the closing balance at the end of the second year. So now this balance at the end of the second year becomes the non-current. Then the current portion, how much is the current portion? The current portion now should be the balance that the total balance at the end of our year reporting period less the balance at the end of the next year. So this is the current portion. Or the current portion can also be found by saying interest that will be paid next year less next year's finance cost. We get the current portion. Now let's continue. Assets as per the trial balance. How much are the assets as per the trial balance? It's 85. The carrying amount of the assets, it's 85 less 19,000, like that. Less, we need now to depreciate the remaining assets. So we'll say this $85, we should less how much was we less the 18, that was the plant that was that had got a dismantling cost. We will also less the 8, the leased plant. So the remaining assets should be 59, like that. Then we depreciate the remaining assets over 5 years. Then the balance of the remaining assets is 47,200. Then now we can get our PPE. Our PPE, these remaining assets plus 6.4 leased plus the 14 plant and equipment acquired. We get that 68. Then the depreciation for the year, we take this for the remaining, we add for the leased, we add that for the first asset, we get that value like that. Now, here we forgot to less the accumulated depreciation. We get the assets like that as 49. Now we are finished with that note. Let's go to the note with the investments. The investment through profit or loss are those held at 31 March 2015 after the sale below. So after the sale, they are carried at their fair value on 1 April 2014. However, they have a fair value of 6.5. So the fair value of these assets is 6,500, but they are carried at here at 6,000. The 6,000 is the fair value at the beginning of the year. So we have got here the fair value adjustment or the increase in the fair value of 500, which will put it under investment income. Let's continue with the note. During the year, the investment which had a carrying amount of 1.4 was sold for 1.6. So this selling price becomes a cash flow. So there was a profit on sale of that of 200. Investment income in the trial balance above includes the profit of 200. How much is the investment income? The investment income is 500. So it includes this 200. So as per trial balance, the investment income is 500. It includes this profit of the said and dividends received during the year. So there were dividends received. So how much is the dividend received? It's 500 less the profit. So the dividends received during the year are 300. Also the dividend received is the cash flow. We are done with that note. Now let's move on to note number 5. Clarion renewed an operating lease on 1 April 2014, that is the beginning of the year. The operating lease payments represent an annual payment in advance of 1 million and a lease premium of 1 million. The lease premium is for 4 years and operating lease expenses should be included in cost of sales. So this is the figure that we are talking about. Let's go in operating lease payments of 2 million. So this 2 million includes 1 million the annual payment and also 1 million the lease premium. The lease premium should not be recognized in a single year. The lease premium should be amortized over the lease term. So the lease term is 4 years. So now we'll simply say 1,000, that was the lease premium, and 1,000, that was the annual payment. We get the 2 million that we have there, but the lease premium should not be recognized in a single year. It should be amortized over 4 years. So we'll simply say this divided by 4. So during this year, we should only recognize 250 out of that. So how much should be deferred? We say 1,000 minus 250. So the 750 should be deferred. It's an asset. It's a deferred income. It's an asset now. So, or a lease premium asset. It should be deferred. So this 750 again needs to be split between current and non-current. So next year we are going to recognize another 250 that will be current, and the remaining 500 out of the 750 will be non-current. Now let's move on to note number 6. A provision for tax for the year ended 31 March 2015 is 3.5. So the current provision is 3,500, like that. The balance on the current tax in the trial balance above represents the under or over provision of the tax liability as at 31 March 2014, last year. Let's go. The current tax is 400 credit. If it's a credit, it was an over provision. So an over provision needs to reduce our current tax expense. So you will master it as this. If the current tax in the trial balance is on the credit side, you should reduce the tax. If it's on the debit side, it's an under provision, you add it to the tax. Now we need to deal with the deferred tax movement. We are told at 31 March 2015, the tax base of Clarion's net assets was 12 million less than their carrying amount. The income tax is 25%. So we calculate our deferred tax as 12,000 multiplied by 25%. We get 3,000. Now we need to put the movement. The 3,000, we're going to take this to the statement of financial position, but we need to see how much was the deferred tax in the trial balance is 2,700. So what is the movement now? We say the closing less 2,700, the opening. So the movement is 300 positive. We need to add to our income tax expense for the year. So when we calculate, we get our tax as 3,400. We have finished the notes, and also we have finished about everything that we needed to calculate. Now let's answer the question. Prepare the statement of profit or loss for Clarion for the year ended 31 March 2015. Now let's put our revenue. Our revenue is 132. There is no adjustment on revenue. Then obviously on cost of sales there should be adjustments. Cost of sale as per the trial balance is 88,300. Now let's go here and extract in our workings everything that goes to the cost of sales. We have the depreciation. The depreciation affects our cost of sales. We calculated the total depreciation here as 17,000. This affects our cost of sales. What else are we told that affects cost of sales? We were told that the operating expenses of a lease here affects our cost of sales. So we need the operating expenses that will affect our cost of sales will be, let's go to our working, will be the annual payment plus the lease premium that should be recognized this year. We get our cost of sales as that figure. When we sum up, we should be getting the gross profit. Now we less expenses. Let's go to our trial balance. Admin expenses is 8,000. Distribution 7,400. Then finance costs. Here in our trial balance, the finance cost that we have is 300. The bank interest, as we have got an overdraft here, and our finance cost again that we have here is 800. This loan interest paid. Then let's go to our workings to get another finance cost. In our workings, we have our finance cost here that we said we will debit the finance cost here. We also have got our finance cost here as the unwinding of the environmental provision. We are taking this from our workings. We also have got our finance cost here under the lease liability here of 570. Scroll down. We do not have any other finance cost. So this is our figure for finance cost. Then now our investment income. Our investment income as per the trial balance, we have this 500. But this 500, we talked about it here. That is made up of 200, which is the profit on the sale of the investment, plus the dividend received. Then let's go again and search if we have another investment income. We said we have got the investment income here again as the increase in the fair value of the investment of 500, like that. So we get 1,000. Our tax here, we calculated here is 3.4. Then from here, we can sum up everything to get the profit for the year. We have done that, the profit for the year. So we have answered the first one for 10 marks. Then prepare the statement of changes in equity. This is for 3 marks now. Everything we have. Equity opening balance. We have calculated the equity opening balance top here. We said before the issue, the equity was 25. The retained earnings, we will take the retained earnings in our trial balance. The retained earnings is 8,600. How much was the premium? The share premium at the beginning of the year before the issue, we have it here, is 2,000. The share issue We calculated these figures above is 5,000. The premium, we calculated the figure above here is 3,000. Then the profit for the year, we have calculated it here. The dividends, we are taking them straight from our trial balance. The dividend paid is 3,900. We have every figure that was needed here for 3 marks. We can now sum everything like that. We have our figures there. Then now, our PPE, we have calculated our PPE on top here. Let's go. We calculated our PPE here as 49. Then our investments, let's go to our investments. Our investments now have got a fair value of 6.5. The lease premium, we said the lease premium, the asset is 500 because it's non-current, but the current portion that we need to recognize next year is 250. So here we will say 750 less the 250, we get the 500 like that. Then the inventory and receivables, we take them straight from our statement, our trial balance. Then we sum up everything. We get that value. Then for equity, we have these figures here in our statement of changes in equity. Is 30, the share premium is 5, the retained earnings is 9.5, like that. The environmental provision, we calculated this figure above. Let's go and take it there. Here, 4,300. Finance lease liability, we calculated this figure, the non-current portion and the current portion. We calculated these figures above. Let's go and take them. The non-current portion is that. Deferred tax, we calculated it above. Let's go and take this closing deferred tax. The loan notes, we calculated it as well above. Let's go and take them in our workings. Unfortunately, the loan note we did not calculate, but the loan note we were told in the trial balance is 20 less what was paid of 5,000. We get 15 like that. Then the tax portion, we take the current tax. Let's go to our tax working and take the current tax provision. The finance lease liability, let's go and take our finance current portion. The current portion of our finance lease liability is 1023. Then the bank overdraft from the trial balance, 1,900. Payables from the trial balance, let's go and find our payables from the trial balance. Can't see them. 9,400. Then let's sum this. Our statement of financial position balances. So it means if we are in the right direction. Now let's continue. Calculate the basic earnings per share. We have got everything now. Our earnings, do we have our earnings? We do have our earnings here, the profit for the year. Number of shares, we calculated the number of shares above. Let's go and take them. We calculate the number of shares here, the weighted average number of shares. Now, our earnings per share becomes earnings divided by the number of shares multiplied by 100 cents to make it cents, 17.2 cents. That was our earnings per share for 3 marks. Now, the extracts of cash flow for 4 marks. The purchase of PPE, how much PPE was purchased? Let's go and take the cash flow of 14 that was used to purchase the PPE. The sale of the investment. Let's go and take the sale of investment. The investment was sold for 1,600. The issue of shares, we calculated the figure. The issue of shares, they were issued for 8,000. Repayment of the loan, we know the loan was repaid by how much? The loan was repaid by a quarter, which is 5,000. Then, how much was the finance lease payments? Now, let's go and get our finance lease payments correctly. This is a finance lease. So, 2,000 was paid as a deposit towards the capital. We also add what was paid towards the capital in terms of annual payment was 930, like that. So that was the annual payment. Then the dividend paid, we take it straight from our trial balance as 3,900, like that. This is what was required of us to prepare the extracts of the cash flows for 4 marks. Thank you guys for watching this presentation, and if you are new to my channel, please do not forget to subscribe to my channel. Also, please, if you find the video useful, please like it, give me a feedback by the comment section below, and also share the video links with your friends. Thank you so much for watching.